Stops. Yeah, I'm. I want to dig deep. I want to look at tops, market tops on the monthly candle chart. Always trying to focus on the higher trend. I believe that if I could time and I really understand that the higher trend with my weight of evidence is really gonna go full march, full steam ahead, then I'll have higher chances of having a successful trade. And identifying bottoms exploding after that, when you get to ride that higher trend. Well, remember, these are monthly candles, man. Years pass by. A minimum of trading. You could probably zoom in on the weekly, and on those pullbacks close towards that, those moving averages, enter, and then compound your gains on the way up. So this is a type of situation that I'm practicing, focusing on, to get those multi years, low effort. I don't want to look at my trading. I look at my charts. I look every day to always get better, to do more observations, and try to figure things out and share. But if you wanted to, was the goal of doing stage analysis on the weekly and on the monthly, to get the ride these. Minimize your whipsaws, minimize entering where you get triggered out, or situation here where you're above the 12-month average, and you shouldn't be in the trade. It's not going the best way. You can't always predict. That's why you have risk and money management. But the goal is to ride these multi-year plays, and you have the trend in your favor, and then add positions as you pull back in a safe manner. And then after that, you exit when that trend decides to go over, guys. So what I want to do is I want to add another element. I want to see market tops. I know on the TWTR Twitter, you see you have tweezer tops, a whole bunch of charts. I think Netflix had some also, and you don't see these as much on the SPX, like really exhaustion, really like euphoria, crazy hope, to the moon, and you're far off the 12-month average, and it doesn't matter, this thing, you can't stop it. Netflix is forever. And then you have these type of tops that set in the market. There's euphoria, but since it's an average of a lot of stocks, S&P 500, market moves a little slower. You don't get those crazy candles. But we're gonna go back in time. We're gonna check the SPX, and we're gonna check those market tops, how they look like, and how they are compared to today. So what I could do, there's this pretty cool on the U.S. recessions by Sinuhet on a Trading View. I like it. There's just this weird thing, and he gets the data, he highlights the green where there's recessions, but like in 2015, it was in a micro recession where there's some elements that technically we were in a recession. I'm trying to Google that to try to figure out. So he highlighted that data as if it'd be a recession. We had a recession right here, but I'm not quite sure if we really were in one. When I look at the unemployment, when I look at the yield curves, there's not much sign. We're pretty far off those signals telling us that we had a recession right here. But anyways, it's highlighted here. I can't take it out, so let's just move on. All right, so here's our super duper famous stop. We're right here. Got away from 12-month average and came back, hogged it up, and then we closed below it. And after that, we closed below horizontal breakdown line. Monthly candle chart. So is this a head and shoulders pattern that we're forming right here on the monthly candle chart? Let's see what we get back in the future. And now we're back above the 12-month average. So right here, this the month is not ended yet. There's examples I'll show you when we go back in the past that if you would have not waited for the monthly close, you would have seen this. You would have said, ah. But by the end of the month, that wick above the 12-month moving average actually came back down to have a close below it, and then we resumed the downtrend. So let's just wait for that. Wait for the close. Okay, let's scoot over to 2008. Same type of thing, getting away. Oh, back. Buyers coming in. Oh, try to get away. No tweezer tops. You see, it's like really condensed, hogging the 12 months, really trying to stay alive, but slowing down your move. And then after that, when it drops below 12 months, it really hits hard. Buyers coming in. Officially, after that, we were in a recession, but we didn't know it at that moment. Just like here, we could be in a recession, but we just don't know it yet, guys. When you revise the numbers, and then after that, finally, yeah, we were in a recession. Well, same thing here. It's like the market already knew when we closed below that 12-month moving average that we were in a recession. We could be one right now, but I guess officially we don't know yet. Pull back up, and this one was pretty cool because you did have a wick above that monthly defined breakdown line. Could have scared a lot of people. But it was below 12-month moving average. By the end of the month, it came back down, and then you had a huge red candle. So that's the pullback, the V shape here, but not a recovery because it went back down after that. So that's another top that looks pretty much like we had today. 2001, trying to get away, always hogging the 12-month moving average, volatility during the month, and when you had a close below, went down, and then a price action tried to go back up, and some wicks above that monthly defined breakdown line scare you a little bit, but always below a declining 12-month moving average. And then after that, we were in a recession. So these are nice for bears or stage 4 players. This is what I was hoping for, that we'd have right now, these type of scenarios, which are pretty clear cut, giving you a good low risk environment here for huge reward. Play that on the way down. On the way down, never challenging the 12-month moving average. Barely challenging it, no close above it. Okay, let's scoot back. So now you see how the market tops are? They're not really extravagant. There's volatility, big candles, lots of move, contrary to small steps when it's going up. But they hog the 12-month moving average. Oh, recession in 91. That's an often forgotten one. And you see again when the 12-month moving average closes below, the candle closes below 12-month moving average. Get away. Oh, sideways move. Big candles, but hogging the 12-month moving average. Nothing extravagant there. Did not last a long time. Recovered, came back, and continued upwards. 87, that's like a market that got ahead of itself. Really, that one looks like a stock that went really away from its 12-month moving average. Huge leg down. But that's not quite the scenario we're having now. So this is another type, like a flash crash, and then it recuperated. So this one is kind of unique for now. Haven't seen that yet. Oh! More tops. Getting away from that 12-month moving average. Right here. Oh, a little higher. Sideways move, hogging it, and after that, oh, dropping. And look again, when you close below the 12-month moving average, you're in a recession. So in the weight of evidence, if I would overlay the unemployment rate, if I would overlay the yield curve, we'd probably get some data that would support that we were in a recession. So right now, the market's telling us bad times. And I like this top, a little similar to what we're having. Pull back up, not quite challenging that monthly defined breakdown line, not challenging that declining 12-month moving average. And guys, this looks like a short period, but these are monthly candles. So you're going to be shorting this for 1, 2, 3, 4, 5, 6, 7 months. What? Another recession right here? I do not know all these recessions by heart. Again, a close below 12-month moving average. This would have been a hard play. So not all recessions are playable. Weight of evidence. No close below monthly defined support. You see, if here you could have got whipsawed there. Yeah, I'm going down. Close above. So not a top, a playable top. Ooh, okay, this is a big top. Big top. Where is... So I go down. When I hit my red candle, that's the support, monthly defined support. So this one had a lot of volatility wicks. So that one, not a tweezer top, but a lot of volatility here. Going away, and when it started closing below, we had a sideways move for a little while. And you see these wicks above the 12-month moving average. This one, this would have probably whipsawed a lot of bears right here. You're down, and then your patience is wearing thin. Months are going by. Oh, buyers are coming back in. You think, okay, this is a base. It's not going down below here. This is the bottom, the sideways move. And then you get that crazy wick right here. So during the week, during the days of that month, the price action was above the 12-month moving average. And actually happened a few times right here. Happened right here. And barely happened here. But this one could have said, okay, I'm giving up on the bear case. This is going back up. And look at that. After that, the next month, if you wouldn't have waited for the monthly close, then you had a huge drop. And after that, never challenging the 12-month average for a pretty sweet stage 4 decline, guys. So this could be a situation where we're producing right now, this type of volatility. The price action going back up. Last gasp of air. Flew too close to the sun. Icarus. What? It's just wax holding my wings, and then melts away, go all the way down. So keep this one as a reminder. Tops, wicks, noise. It's hard on the patience. It's hard on your emotions. But you wait for those monthly candle closes, guys. And that's the last one I'm going to do for now. The 1970 recession, another top going far away and closing below 12-month average, trying to go back above, started monthly defined support, and after that, when you get a close below it, right here, you had some price action above the declining 12-month moving average. Right here, you see, you could have said, hey, Pat, I closed below the 12-month, the horizontal breakdown line, but you're still inclining 12-month moving average. So it's the weight of evidence. Sometimes now I'm so used to it, I think my brain does it for me. I wait to see the 12-month moving average declining, and then I skip steps. I draw my horizontal support breakdown lines, and I just avoid the false ones. Just, I guess it's experience, right? So broke down. Again, looks a little bit like this one, sideways move, and after that, these wicks. No, bear market's stupid. Why'd I do that? Markets always go up, and no. And after that, you would have had this sweet ride all the way down here. And that's pretty much it, guys. So look at these market tops, how they build, how they advance. Similar. And always when you have that big drop, you're very close to a recession, guys. Very close to a recession when you're declining 12-month average. Everything's declining. Economy's declining. Stocks, earnings, everything's declining. For the price action to go down, stuff has to be declining. The market is discounting declining stuff, guys. Whatever it is, whatever analysis, bad news, it's declining. Another market top right here. Once you're below, last gasp of air. Sometimes they make it above, sometimes they don't. You're in a recession. Oh, look at that. Recession. Closes below 12-month average. And then you got this 1987 flash crash. Odd man out, different. But still, you had many years, or at least 1 year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Yeah, a year just to get back above 12-month average, and probably 2 years just to get back above these levels, guys. So even buy and hold, not super duper. Another small top like we saw. Recession as soon as you got that close below 12-month average. And here we are. Fractional reserves disappeared right here. Crazy stuff. I have a few posts on StockTwits and Twitter. 82 right here. When they removed in 82, I forget exactly which date. I think it's November. The buybacks were rendered not illegal anymore. 1934 Act, they were considered stock manipulation. In 82, late 82, they said, it wasn't manipulation after all. And after that, what? And then the stock started going exponential. Compound that, fractional reserves disappearing to the moon. And then we're starting to create bigger and bigger bubbles. So the top, remember, going all the way back to the other ones, same type of thing. Retest, very close to officially a recession when we're at these levels here. 2008, as soon as we had that close below 12-month average, recession, retest, easier on the spirits. The price action did not go above the 12-month average. And here we are today. Price action going above, but the month has not ended yet. And we could be very close to a recession right here, guys. So that's it for market tops. I'm going to try to do some more. Keep adding clues, maybe giving you hints to where to look at. And so you could keep digging and finding cool stuff that give you more higher probabilities of having a successful trade, guys. All right, that's it. Thanks for watching. And don't forget to subscribe. I appreciate it.